Welcome back to my channel, Value Investors. In this video, I'm going to be covering the healthcare sector. This sector underperformed the S&P index, but historically, it's been a really good sector. I think it's really going to bounce back this year and probably outperform other sectors, especially the ones that did really well in 2023. The reason I believe that is that stocks in this sector are really discounted and they're really set to perform in 2024. I'd like to share with you why I'm thinking that and what stocks I'm looking to invest in the new year. Before I jump into the video, do me a favor and like my video, subscribe to my channel, and please leave a comment. Let me know what you think is the best sector for 2024, and please give me feedback on this video. Looking at the performance for 2023, the companies that did the best were communication services, information technology, consumer discretionary. Those sectors did better than the S&P index, and they did really well. Now, all the other stocks underperformed the S&P, which was interesting. And one that underperformed is healthcare. But historically, it's been one of the better sectors to invest in. It's done really well. So I believe that it was sold off in 23, probably far more than it should have. There's really good companies there. And I believe it's going to have a bounce back year just looking at the data of how it's done over the last 5 years and in the last 10 years. Keep in mind, over the last 5 years, it's done 64%, and that's including the year we just had. So it's really a number that if they had just kept up with the S&P, it'd be far better. So that's one of the reasons why I think the healthcare sector may be the best sector to invest in right now to achieve the best performance for 2024. As a value investor, it's not a matter of looking behind or in the rearview mirror to see what worked and, hey, let's do that all over again. It's really about trying to understand where the market's going, where certain companies are highly discounted unfairly for whatever reason, and buying companies that are discounted. So that's exactly what I'm trying to do with the healthcare sector is this sector was discounted and there aren't really good reasons for it. There's a lot of good reasons to believe that this sector overall is going to perform better just based on its historical returns. I'm trying to achieve the return in 2024 by doing something to prepare to buy stocks, own stocks that are going to do really well in healthcare in 2024. The healthcare sector has a variety of industries. The biggest one is drug manufacturers. This is companies, pharmaceutical companies. So you think of Novartis, Pfizer, and so forth. Eli Lilly, which is the biggest company in that particular industry. Biotech is a really exciting industry. It resembles technology, which is high growth. These companies make drugs and cures to certain illnesses, and they just explode in value, which is really interesting. And health plan providers, right? So this is United Healthcare, and they pay for all the different services that people get. So this particular sector has a variety of companies. Some of them are incredibly valuable. Some of them are a little more like a manufacturing company. So it's interesting to look at the variety of industries for this sector. In order to find the best companies to look at in this sector, I ran a stock screener and I wanted to focus on a couple of variables. First, I wanted to look at free cash flow growth over 5%. So show me companies that have growth over 5%. And I don't want the forward price to earnings to be over 25. And last, I want the debt to EBITDA to be under 3. That way the balance sheet's in good condition. And then one more item is free cash flow yield of 7% or higher. I value companies based on free cash flow, and I don't want them to have too much debt. And I want their price to earnings to be reasonable. And based on that search, it came back with a list of 10 companies, and they all look pretty interesting. I did some homework on each one of them, kind of reviewed their fundamentals, put them all through my scorecard in my model, and anything with a check mark, they are potentially a good investment for me. So I'm going to do more information gathering, some more decisions, and then make a decision whether I'm going to buy shares in these companies. There is one company, Catalyst, that I'm already an owner in, so it just showed up on the list. And that's that one I'm already owner in. Everything with a check mark, I'm going to show you additional information in this video. Anything with an X means that I disqualified it. It's not an investment that it belongs in my portfolio for one reason or another. Now let's take a look at each company with the green check mark and share with you what I like, what I'm seeing as part of my review of each company. The company that was ranked number one on my stock screener was McKesson Corporation. And by the looks of it, it's a really good quality company. Overall, the stock has been rising if you look at the last 12 months. The company has a market cap of $60 billion. It has a forward PE of 15.77, which is really reasonable. What does McKesson do? In in a simple manner, they're a distributor of all things to a hospital, whether they need surgical equipment, drugs, uh, items like gloves, everything a hospital would need. McKesson is their source. They also distribute pharmaceuticals and drugs. So all the things that a hospital, a doctor's office, a large healthcare provider would need, and they've been really consistent. The 1 year chart looks this way. The 5 year chart looks pretty much the same way. Just consistently, the stock price has been going up over 5 years. The other items that I like about the company is they generate free cash flow. That's a qualifier for an investment for me, and they generate really good free cash flow. The revenue has been growing over time, so that looks really good. The earnings per share next year is expected to rise to $31.11. Very good. I also believe that they can have a multiple expansion year where you see, instead of them trading at 15.9 forward PE, they could trade at 20 or so. And that could really raise the stock price. Their debt to EBITDA is very good, high quality company. It's 1.37. I want less than 3, so most definitely it qualifies. The company is a profitable company, generating a good level of EBITDA, which is very good. And overall, it just has a very good profitability ratio. This company has been very consistent for the last 5 years, if not more. So this is a high quality company worth considering to add to my portfolio. And I'm going to do more analysis on this company. The next company I'm going to review is United Therapeutics Corporation. And this company is really interesting. They have pharmaceuticals, they have certain franchises of drugs that are doing really well. And that's their cash cow, a lot of profit. They're also going into xenotransplants, meaning that they are growing organs, and those organs would be grown and then transplanted to a person. As you may know, there's a long list of people looking for a vital organ, and some people die because they're on the wait list and never get an organ. And the prospects of potentially in the future, United Therapeutics being able to provide more organs to these people that need them is really interesting. They're not quite to a commercial state of doing that. It's just this company, that's where they're headed. And it seems really interesting and very futuristic. The company has been trading quite down in the current year. It's down 21%. My comment earlier that high interest rates are discounting biotech companies, and I believe that's the case here, is this is a riskier company that has a very adventurous and optimistic growth strategy, and this company's been discounted quite a bit. They have a market cap of 10.29 billion, which makes them a mid-cap stock, nice small mid-cap stock. Their forward PE is really low, under 10. I really like that about the company. They generate really good free cash flow. Love that. And their revenue has been growing here recently, which looks really good. Next year, their earnings per share is expected to rise to $22.36. And if you look at where they're categorized in the pharmaceutical industry, which is correct, but they also have that biotech component to them. So I think they can have a multiple expansion period beginning 24 and potentially into 25, where you could see their price multiple really double. And that would really cause the stock to really rise. Their debt to EBITDA, really low. Great job, really keeping down that debt. And they're a real profitable company. Their existing drugs do really well. They really bring a lot of good to the people that take them. So they've been very successful with those drugs. This company, I've done more homework on than the companies you're going to see. with the exception of Catalyst, which I'm already an owner in. And this is likely a company that I'm going to buy shares in, and we'll be creating a video on this company individually to show my analysis and why I intend on buying shares in United Therapeutics. The next company is Molina Healthcare. And this company is a little different than the ones I just showed. These guys are managing a lot of the Medicare, Medi-Cal programs. So they're somewhat of a healthcare payer-like company. They have a market cap of a little over 20 billion, so it makes them a mid-cap stock. Their forward PE is nice and low, below 16, which looks good, better than United Healthcare as an example. And for the past year, the stock's done okay, up 7%. But that's my point on the healthcare being discounted. This is a growing company, low PE, and their stock price really didn't keep up with the S&P in 23. So to me, that's an opportunity. Their growth rate on revenue has been phenomenal. Look at that growth rate. Awesome. And if you look at their free cash flow, they generate a lot of free cash. So very good to see high cash flow generating companies. Their PE is going to grow, their earnings per share is going to grow in 2024. It's expected to be $23.87. Now, they have a PE multiple of 15.8 times forward earnings. The industry is at 17. So I think they could see a little bump on that multiple in 2024. Their debt's under control and less than 3 times EBITDA. Molina is likely going to be a stock that I add to my portfolio. And because they're just a really solid company, I like that they're a mid-cap stock. I owned United Healthcare for a long time, did really well with it. It just got so darn expensive and big that I begin to think that someday there's going to be a reckoning with United Healthcare. I like little companies, or I should say smaller companies, that are set to grow and really kind of grow into a pretty significant market cap. Molina may just be the company that does that, growing from a $20 billion market cap up to like a $50 billion market cap. I could see that happening for this company. And I'll be doing more analysis on Molina, likely in buying shares of this company. And you'll see a video of this company in the next 30 days or so on my channel. Sora is a distributor of healthcare products, so everything a hospital would need and so forth. Similar to McKenna that I showed earlier in the video. And this is just a smaller version of that, but they're a good company. They're about a $40 billion company. Their forward PE is going to be 15.59%. This year, their stock's done okay. It's up 20%, not keeping up with the S&P, but far better than other companies in this particular sector. Their growth in revenue is really good, really nice growth in revenue. Their cash generation is very good at $3.45 billion per year. Their earnings per share next year is expected to be $14.18, and it's growing from this current year. Their multiple is 15.8, and I think it could keep that multiple, potentially grow it, because they are a growing company. And their debt is under control, less than 3 times EBITDA at 1.7. This is definitely a company I'm going to put on my watch list. I'm not ready to buy shares in this company. I tend to like companies that are creating intellectual property and not necessarily just being a distribution company. This is a stable company. It's a good company. I'm going to put it on my watch list. I'd probably wait for a nice pullback to buy Sora, and because they don't have any IP. If you have IP like a pharmaceutical company or biotech, that intellectual property becomes really valuable and you can make lots of money. In a distribution business, it's much harder. The next company up is Harmony Biosciences. This is more of a biotech company. And you can see that in 23, this company was heavily discounted, even though it has a forward PE of 10.79. It's a small cap company at 1.88 billion, and they've been growing their revenues. They have a focus on some neurological diseases that they really have a positive impact on with their biotech pharmaceuticals. They produce free cash flow already, which is excellent. And their earnings per share next year is expected to be $3.57. Their multiple is really low, and I think it should really be around that 25. They're a growing company, and they should have a multiple expansion year in 24 and 25. The reason why I think the stock's being held back is the high interest rates, and this is a smaller company. So I think investors are a little afraid of investing in a small company. Their debt to EBITDA is really low at 0.92. Harmony is likely going to be a company I buy shares in, and there will be a video on this company in my channel. Catalyst is a company I already have been an investor in. I bought in 2023 because I saw that this stock was really discounted, and I'm doing really well in my investment. It's up really nicely, especially more recently. You've seen some really nice rises in the stock. But over the last year, you could see it's down 14.97%. Again, I believe this sector is discounted for no reason. This company is a good example of it. Their forward P is 13.66%. They have drugs that are really helping the people that are taking them and really helping people that have these chronic illnesses and rare illnesses that they help with their drugs. The company has really good free cash flow, and their next year earnings per share is expected to be at $1.27, a big increase in their earnings per share. Their multiple should be higher, around 25, and their debt to EBITDA, they pretty much have no debt, which is excellent. So overall, Catalyst has been a good investment for me, and I'm going to continue to buy shares in this small biotech company. So that covers the stocks that I found that were worthy of like additional analysis from the stock screener. Some really interesting companies, especially those biotech companies that I think are really discounted. I'm going to really look closely at those. I'm also going to consider the medical distribution companies that I think are really solid investments long term. I hope you found that list interesting. Let me know what you think of the companies that were listed in this screener. And one last note is I never recommend you buy any stock that I cover. Everything that I do is just one investor sharing his investing journey on YouTube. It is really just from an educational purpose or entertainment purposes only. The healthcare sector, I think, is going to do really well in 2024. And I'll bring you back to decisions I made in 22 that really worked out, principally investments in Meta, Alphabet. They were heavily discounted. Technology was heavily discounted in 2022. And look what it did in 2023. It just blew it out. It just did so well. And I feel the same way that these high quality companies in the healthcare stock are really discounted. These are really good companies. So for a value investor, this is a really good opportunity. And that's why I'm going to be buying into these companies so that I can really get a nice return in 2024 and 2025. I hope you found the video interesting that I produced. I'd love to hear comments from you. Let me know what you think of the healthcare sector. And please, if you think otherwise, please share that. I'd love to learn from your experiences and understand what you're seeing out there in the marketplace. Do me a favor and like my video and subscribe to my channel. Happy holidays and good luck investing in 2024.